The market's cruelest joke is simple. The fastest way to stop losing is to stop trying to be fast. WD. Gann understood that panic, which looks wild to the crowd, is actually obedient to a master clock. Emotion has a mathematics. Fear expands and exhausts in cycles. Greed accelerates, then succumbs to time. He treated price as a visible expression of vibration and time as the judge of truth. This flips a common belief. Prediction is prized, but confirmation is what pays. If you value method over motion, stay with me. Most traders feel the same wounds: FOMO, overtrading, impatience. They react to motion and ignore schedule. Gann's answer was definite, mechanical, orderly. Build a swing chart to reduce noise. Measure corrections. Compare each reaction to the last in both price and time. When a correction becomes an overbalance greater in magnitude or duration, the emotional regime has shifted. This is not a feeling, it is a rule. Time dominates price. A move that cannot persist at a sustainable angle is disorder masquerading as strength. The 1x1 unit of price per 1 unit of time becomes a baseline for pace. Steeper angles indicate excitement. Flatter angles indicate fatigue. Yet even angles must report to the calendar. Fear keeps appointments, minor cycle counts, seasonal turns, anniversary windows. Confluence is not poetry, it is probability. The professional separates harmony from noise. He waits for price to respect or fail its operative angle, for reactions to cross old levels with authority, for energy to contract or expand inside specific windows. He does not soothe boredom with trades. He measures boredom and calls it patience. This is the paradox. Serenity is a process. The market rewards boredom. Our task is to quantify it. If emotion obeys law, we can locate its exhaustion. The question is how to draw that law with lines and time maps. We begin with geometry swings, angles, and windows that turn fear into a measurable structure. If emotion has mathematics, geometry becomes our instrument panel. We translate noise into structure by drawing a simple swing chart up and down legs that ignore minor tremors and record only decisive turns. Each swing becomes a bar of emotion measured, not felt. Gann taught that fear shows its hand when corrections exceed their previous scale. This is the law of overbalance. When a reaction in price or time becomes larger than any prior reaction in the trend, the balance of power has shifted. Structure, not commentary, declares the change. Angles refine the reading. Rate is character, a trend that respects its operative angle. Its orderly rate of advance or decline displays harmony. When price accelerates beyond sustainable pace, the move looks powerful but is unstable. When it flattens and cannot recapture its angle, exhaustion is developing. We note crossing old levels, where price returning through prior swing peaks or troughs confirms the market's willingness to reverse polarity. Geometry gives us a definite map. Time windows give the map a schedule. Minor cycles, seasonal turns, and anniversary dates form the clock where emotional extremes keep appointments. A break in structure inside a window carries more weight than the same break outside it. Confluence is our first safeguard. Overbalance plus angle disturbance within a known window is evidence. Outside the window, the same pattern is a suggestion. The enemy is motion without schedule, moves that impress the eye but fail temporal tests. We refuse the crowd's urgency. We record the size of each correction in points and in days, comparing today's emotion with the archive of prior swings. Orderly markets obey proportion. Disorder appears as asymmetry that persists. Yet structure alone is not verdict, only probable cause. A genuine shift must survive interrogation. After the break, the market will retest. Its voice lowers, its ranges narrow, its volume whispers truth. The next chapter studies that whisper, the secondary test that separates noise from conviction. The market shouts at emotional peaks and whispers its truth during retests. Gann's secondary test doctrine begins here. The first violent move rarely tells the story. The retest within a defined time window reveals the measured intent. After a break, a rally, or a sell-off, price returns to the scene of the event, and the character of that return, its volume, its range, its ability to cross old levels decides whether we are seeing accumulation or distribution, exhaustion or continuation. The enemy is the crowd's impulse to trade the first motion and ignore the confirmation. Professionals wait. They read the swing chart for context, Ask if an overbalance has occurred, and then observe the retest with rule-based neutrality. In accumulation, a secondary test of a prior low occurs on lower volume and narrower spread. Supply is absent. The vibration is calmer. The movement is orderly. In distribution, a test of a prior high fails to extend. Upthrusts appear, range is narrow, and effort no longer produces result. The core model is definite. Identify the event bar. Define the window for the test. For example, a minor cycle of 313 sessions or into an anniversary confluence. Measure the retest against the event in 3 dimensions: volume contraction or expansion, range compression or expansion, and the ability to hold or cross old levels. Operationally, we act only when confirmation exists. A low-volume retest that cannot break the prior low and closes back within range invites controlled risk with stops just beyond the test pivot. A high-volume retest that slices through levels with wide spread confirms continuation and keeps us patient or aligned with the trend. This is mechanical discipline disguised as calm. Boredom becomes an ally because the test requires time to appear, and patience converts illusion into measured truth. When the retest confirms, emotion loses. Leverage. We are no longer predicting. We are listening. Yet one question remains. Even with a clean test, can the move sustain its pace? The answer demands a standard of rate, the angle that time imposes on price. Speed seduces. Pace sustains. The paradox is simple. Dramatic motion signals emotion, but only a measured rate proves trend. Gann treated angles as the market's metronome, the 1x1 as a baseline of harmony, 1 unit of price for 1 unit of time. Above it, acceleration. Below it, deceleration. The law is unemotional. A move that cannot maintain its operative angle is mathematically unsound, however loud the headlines. The enemy is entry by spectacle. Crowds buy the sprint and sell the pause. Professionals test the rate. Draw your angles from confirmed pivots, not guesses. Identify the operative line the market respects through repeated touches and orderly pullbacks. A break is not yet a verdict. The verdict is failure to recapture within a reasonable number of bars. The test is mechanical. Break, rally, retest, recover the angle or concede the change. Respect for angle equals health. Rejection equals weakness. This becomes the second confirmation. Structure first. Overbalance reveals a shift in character. Angle second. Can price keep time with itself? Crossing old levels adds proof. A trend that advances yet cannot reclaim its working angle reveals hidden exhaustion. A decline that pierces down angle but quickly reattaches warns of bear traps. Rate filters rumor. Operational rules remain definite. Wait for a confirmed pivot. Project the 1x1 and its harmonics. Observe the first excursion. Demand recapture before commitment or accept the break with defined risk. Stops live beyond swing pivots or just beyond failed recapture. Position size follows statistics, not hope. If pace slows into flattening angles while ranges narrow and volume fades, expect distribution mechanics rather than continuation. Mastery feels indifferent to speed. You align with the engine's cadence and ignore noise that does not keep rate. Yet angle is only the ruler. It is not the clock. If the market must move at a sustainable pace, when is it scheduled to move at all? One test still remains. Time windows, cycles, and anniversaries where emotions keep appointments and angles gain authority. Time is the quiet law that orders emotion. Gann taught that the market's most reliable extremes are not spontaneous eruptions but scheduled events, arriving within cycles that repeat with an almost musical regularity. The paradox is simple. By waiting, you move sooner. When you let time do the heavy lifting, price reveals its truth with less effort and fewer false starts. Minor cycles, seasonal turns, and anniversary dates create windows where fear and greed are most likely to overextend and then submit to measurement. The enemy is boredom disguised as urgency. Outside these windows, traders invent reasons to act. Inside them, professionals test for confluence. The confluence protocol converts patience into method, requires structure, rate, and time to agree. A swing that shows overbalance, an angle that breaks and fails recapture, and a secondary test that whispers weakness when these occur inside a predefined window. Probability is no longer an opinion but a measurable edge. Operationally, Build a time map, mark monthly and quarterly turns, sector-specific seasons, and instrument anniversaries where prior pivots formed. Pre-commit to inactivity between windows. Don't negotiate with yourself when the calendar is silent. During windows, upgrade your tests. Insist on a clear crossing of old levels. Observe volume behavior on retests, and judge whether price can maintain or regain its operative angle. If two dimensions align but time does not defer, if time aligns but structure is incomplete, wait for the secondary test. Mastery, at this stage, feels like ordered silence. You record, not react. You count days and let the market reveal its vibration without dragging you into noise. Boredom becomes signal. When nothing aligns, nothing is done. And when alignment arrives inside the window, execution is unemotional because the work is already complete. Yet one challenge remains. Can you hold this discipline under pressure, converting law into identity? That is the trader's creed. Freedom in markets comes from constraint. The more definite the rules, the less room fear has to negotiate. Gann's mathematics of emotion resolves into three conformations that convert noise into order and impulse into discipline. First, the overbalance shift. When a reaction exceeds prior reactions in price or time on the swing chart, the market declares an emotional change of state. Measure corrections, not headlines. Second, the secondary test. After the first move, the retest within a defined window reveals truth. Volume contraction, narrowing ranges, and failure to cross old levels with authority indicate distribution. After rallies or absorption after declines, the market whispers, we listen. Third, the angle confirmation. A trend is healthy while it respects its operative angle and can recapture it after brief excursions. Break the 1x1 and fail to regain it within the cycle window, and pace reveals exhaustion. Operate by confluence. Two confirmations inside a scheduled window are action. One outside the window is noise. Time dominates price. Prediction yields to confirmation. The market rewards boredom. Place stops beyond the last confirmed swing or the angle recapture level. Size by volatility, not emotion. Accept small losses as tuition to the master clock. Identity is the final battleground. Accumulation and distribution are not just phases on a chart. They are mirrors for patience and impatience. Professionals observe, confirm, and align. Amateurs predict, react, and hope. The rule becomes a moral principle. Do nothing until the market proves you right. When windows are closed, cultivate silence. When windows open and confluence appears, execute without drama. Serenity is mechanical. We measure fear, locate its exhaustion, and let time arbitrate our conviction. The creed endures. Time first, structure second, pace third, confirmation over prediction, survival over excitement. From this order, profits become byproducts, and uncertainty becomes a measured companion.